Hi, good morning. It's nice to see you again over here. New bright morning, and this is Bhaskar, RN Bhaskar from BKBB, which is an acronym for Bhaskar Key Business Party. It is a channel that brings to you policy analysis, short stories, and occasionally conversations. But at 8:15 in the morning, we come to you with the news behind the news. We take a few high headlines that we think are worth talking about. And today I have my co-anchors with me. There's Katya there. Katya, welcome. And there's Anurag. Welcome, Anurag. Good to see both of you today. And among the three of us, we are going to discuss the following titles. The first title is on Trump's tariff relaxations expires in 2 weeks' time. India is totally unprepared. The second one is one on railways and how railways is restructuring its fares. And the third one is the rupee is hurt because of reduced interest rates. Let's start with the first story. Trump has been in the news for the last several months, and the latest because of a fragile truce and ceasefire that is called. Whether it lasts or not, one doesn't know. But the war on Iran was unfortunate at a time when discussions are going on. And Israel has not been reprimanded by the US. Gaza killings continue, and the US is in a better. And now he's got a third killer app coming up in just 2 weeks' time when the tariff relaxations expire, and he's going to announce his new tariffs. Many countries have already started preparing themselves for counter tariffs. And that includes many of the EU, the UK, Canada, and other big players, and China. India has not done anything. India is unprepared. And suddenly, India realizes there's no need to kowtow before the US and says, we are not in a rush to have a trade agreement. So in 2 weeks' time, we'll see how the tariffs hit India. And how exports also hit, because India is already a country which has deficit financing as a chart tells you. Our balance of trade is getting worse year by year by year. There were three things India had to do, which India hasn't done yet. It has to look for new markets. And India does not want to look at new markets. The Commerce Minister believes that talking to the ASEAN region will be a window for Chinese imports. But the Chinese imports are already coming into India. You have to structure those imports in such a way, and the Chinese incidentally, maybe you forgot. But 2 years ago, China made a counter offer to India. Look, you need our goods. There will always be a trade deficit. We can make you another offer. Whatever trade deficit we have, convert them into investments in your country, in projects that will help your country and help our country. India could have found solutions. India could have negotiated. India has missed its chances and refuses to look at other markets, and it's going to hurt India very badly. Of course, the whole world will come to a shrieking halt if the tariffs are actually imposed, because suddenly trade will get blocked. Prices in America will go up sky high, and the treasury bill yields will also climb suddenly because it's an uncertain, precarious market. Of course, India is going to get hurt because of its own myopia. And that takes us to the second story, where India is trying to get some more money. And that's the railways. Katya, could we have you?
This is only a source-based story. Just want to leave the disclaimer upfront. So it's expected to hike prices from 1st of July. Indian Railways are supposed to hike passengers fares. Doesn't happen very often. In fact, this is the first time since the COVID pandemic that this new fare system is taking into effect. Also, another disclaimer: this is only going to be a marginal hike if you see, and then it is very, very, very staggered in a different way. So for one there is no change in suburban fares. So monthly season tickets, people who play to go to work, they do not have to worry anything about. And then until you, in ordinary second class also, you short haul distances like 500 kilometers, there's not going to be any hike. The long distances is risen by half a paise, which is actually really marginal. And then mail and express and non-AC also, the prices are going to going up. AC classes obviously are the first target when most price hikes happen. They are going to go up by 2 paise per kilometer. So who will it make a difference to? It will make a difference to a lot of migrant labor who are traveling long distances. It is only a marginal hike if you see, but if you look at it from their perspective, from the perspective of migrant labor who travel long distances for jobs, there has been little or no increase in wages itself, and inflation has been going up. It has started maybe cooling down in the last few months, but it's been cooling off, so it's already been a pressure. So for people who travel long distances, this is going to hurt them a lot. But what kind of revenue will it bring to the government, and how it will help the government? Sir, what is your opinion?
The railways needs restructuring. Till now, the railways has been making a lot of money through freight and uses freight to subsidize passenger traffic. But industrial production is down, so
Right.
freight earnings have also gone down.
Mm.
Your railways are in urgent need of repairs. If you don't
Right.
repair them, you'll have train accidents, you'll have track fractures,
Mm.
and you'll have derailments.
Mm.
So the railway is caught. If it increases fares beyond a certain point, a public whiplash. And the government wants to make sure that the voters kept happy. But it's not been able to restructure its fares to make sure that the freight also pays. And now that the freight prices are going to decline because of industry slowdown, it's going to hurt the railways even.
Right.
Well, it, railways has got a job ahead.
It's
Anyway, let's go to the third story. And the third story is about how uh, it's about monetary policy in a way. Can we have Anurag?
Good morning. Why is the rupee coming under pressure even as inflation trends lower and growth remains positive? The answer lies in the narrowing gap between Indian and US bond yields, a shift driven by recent monetary policy moves. In the past year, the spread between India's 10-year government bond and the US 10-year treasury has dropped 70 basis points. Now, the yield spreads measure the difference in returns between two debt instruments, often used to compare bonds from different countries. Even when the yield spread narrows, as seen right now, it signals that Indian bonds are becoming less attractive to foreign investors compared to the US bonds. This is because the extra return from taking on Indian risk is shrinking, prompting investors to seek better opportunities elsewhere. The RBI has cut its benchmark policy rate by 100 basis points in just a couple of weeks ago, bringing it down to 5.5%, the lowest since August 2022. In contrast, the US Federal Reserve has kept its federal funds rate steady at 5.25 to 5.5%, with only gradual cuts projected ahead. The divergence means India's rate cuts have outpaced those in the US, boosting the decline in the yield spreads. Historically, the rupee tends to weaken when the yield spreads contracts. For instance, between 2015 and now, the spread has shrunk by 360 basis points, and the rupee has lost nearly 26% of its value against the dollar in just a decade. Furthermore, this effect is compounded by softer economic and corporate growth, which can further dampen investor sentiment and limit foreign direct investments. Looking ahead, the trajectory of the rupee will depend on how quickly the spread recovers. If Indian growth remains subdued and the US maintains higher rates, the rupee may face continued pressure. What's your take on this, sir?
It's because the RBI reduced interest rates, that is why the rupee is likely to get weaker. Globally, please remember that you can either control inflation and interest rates, or you can interest and inflation rates, or you can control exchange rates. You can't control both. Something has to give some point. The RBI tried to reduce interest rates to galvanize production. But if the rupee becomes weaker, it means all imports become weaker, become stronger, become more expensive, and India is an import-intensive country. And all the PLI schemes demand large imports. So you have a government that has reduced interest rates, though it was not warranted. It was not warranted, A, because the country has still got high inflation, even though momentarily it seems to be low. Second, if you look at the currency circulation is going up even higher than the GDP growth rate. And the third is counterfeit currency is increasing. That is a bottom pressure on inflation rates. You can't have currency, you can't have duplicate currency, forged currency, and low interest rates. You just can't. Anyway, let's see which way the economy goes. As I mentioned earlier in the previous chart, India's balance of trade is terrible. India's GDP growths are not very attractive. Every time the government says, no, it's going to go up this year. The trajectory has been declined and declined. The growth, there's still growth, but it is a declining growth. India will have to pull itself up by the bootstraps. And that, in a way, brings me to the end of today's session. And that, in turn, takes me to questions. But before the questions, my usual reminder, please click the subscribe button. Please click the like button. And most important, please tell your friends and all those people you know about this channel. We want the numbers to grow. And finally, let's go to the questions. And the questions are important. The first question is for Katya. While the rates seem very low at 2 paise or 1 rupee per kilometer, the longer the distance, the more the expensive.
Right. Agreed.
You can't integrate a country where you discriminate against longer travelers or against the smaller travelers.
Yeah, longer distance, people who travel long distances are already putting in a lot of emotional and other pain to come to work. So, come to work, come to a different place to work, and they travel multiple times a year. So it is an expense to them. So, ideally, we should support them. And then if at all try and reduce a little bit of pain, which is unfortunately not happening. So the distance problem is always there, and we cannot increase AC fares too much also, sir, because the competition with flights is increasing. Flights are getting cheaper, so that competition is always there. The second and third AC is also a question. So you are right, they are between a rock and a hard place, railways.
Very good point. Thanks a lot. And let's go to the second question. The second question is about how badly will India get hurt because of import policies? And the answer is very simple. It is going to be hard because India will have to work out a way how to make its exports competitive. A weakened rupee will allow exports to go up, but a weakened rupee will make imports more expensive. And India is an import-driven country. So it means net balance is that your trade deficit will be under tremendous pressure and is likely to go up. And there is another question. Will India's unpreparedness on tariffs backfire? Yes, it will backfire. You have not been able to create new markets. You have not been able to negotiate with Trump. Negotiating with Trump is difficult. But India has to do something. You just can't sit in a foreign country, oh, please help me with the trade policy, please help me with the trade policy. You have got to create new markets. And the third one is Can we expect Indian Railways to function better with accountability? Katya, would you like to read that up?
Everybody functions better with accountability, but I do not, I think this is more of a revenue issue currently than that. Like you said, railways is in a huge investment phase, and something's got to give somewhere. And like you said, industry core sector growth is shrunk to below 1%, so which is a very bad situation. So we will have to subsidize our own safety.
I guess so. Thank you, Katya. And the last question is on uh, the rupee. How low can the rupee go? That's predicting, that's future forecasting. I'm not a forecaster, I'm not an astrologer, but the rupee is weak. And please remember, the rupee appears strong against the dollar because the dollar is also shrinking. But take a basket of currency in the world, the rupee is slipping more and more and more. In the next 2 months, you'll see it will appear as if the rupee is strengthening because the dollar is getting weaker, which means the dollar becomes very attractive for exporting and very expensive for importing for the US. Again, India is going to face trouble there. Anyway, thank you very much. Have a great day ahead. May your day be profitable and successful, etc. But yes, come back tomorrow. We look forward to seeing you. Have a wonderful time today. Take care.